Hey everyone. Looks like we're taking a deep dive into the world of ETFs today. You know, they're getting a lot of buzz, even being called the gold standard these days. But what's the hype really about?
Well, it's more than just hype. They've really tapped into what modern investors are looking for.
Right. And one of those things is flexibility. It's kind of mind-blowing how ETFs let you own a slice of entire sectors like tech or healthcare all at once.
The ease of diversification is pretty powerful. Think of it this way. Individual stocks are like bricks, but an ETF, it's a prefab wall, instantly adding structure to your portfolio.
Okay, that's a way better analogy than I could come up with.
Thanks.
Speaking of quick and easy, though, let's talk liquidity. That's the ability to buy or sell easily.
Huh?
With ETFs, you're not stuck waiting around forever.
Exactly. And that's not just convenient. In a volatile market, that speed can mean the difference between taking advantage of an opportunity or, missing out completely.
It's like dodging a financial pothole, something like that.
Sure, I like that. Okay, moving on to something everyone loves, saving money. One of the big draws of ETFs is those low expense ratios.
Yeah, those are the fees you pay for managing the fund. And it's worth pointing out, they're often much lower for ETFs compared to traditional mutual funds.
I mean, think about it. Let's say you have $10,000 invested. A difference of just 1% in fees can add up to thousands of dollars over, 10 years.
Exactly. And those savings can really compound over time.
It's like choosing to fly economy instead of first class,
You still get there.
but with a lot more cash in your pocket. Okay, next up, transparency. With ETFs, you know what you own.
Right. There are no mysteries. And in the world of finance, that transparency builds trust, which is really important. ETFs give you all the information about their holdings up front.
So no surprises.
Right.
All right, we have to talk about market volatility. ETFs aren't immune to the ups and downs, are they?
Of course not. Every investment carries some level of risk. However, the diversification built into ETFs does provide some risk management.
So it's like having a strong foundation.
Exactly. You're spreading your weight, making things a lot more stable.
Makes sense. Okay, let's shift gears to accessibility. ETFs have opened up a lot of possibilities for investors who, don't have a finance degree.
It's really democratized investing.
Hmm.
For instance, we now have ETFs focus on specific themes like AI or renewable energy.
So you can invest in those cutting-edge industries without having to, become an expert in all of them yourself.
Exactly.
Now, we briefly touched on this before, but besides low fees and transparency, there's another perk, tax efficiency.
Yeah, because of how ETFs are structured and traded, they often lead to fewer taxable events.
So more money stays in your pocket, even after taxes.
Nice.
Yeah.
Okay, let's talk about the different types of ETFs out there. It's not a one-size-fits-all thing, right?
Oh, absolutely not. We have broad market ETFs that track major indexes like the S&P 500.
Those are kind of like the foundation of your portfolio.
Exactly. Then we have sector ETFs. Those let you focus on specific industries.
Healthcare, technology.
Right, or even things like cybersecurity or robotics. So you can really personalize it.
We also have bond ETFs, commodity ETFs, international ETFs, and tons more. It all depends on your goals and what you're comfortable with in terms of risk. Yeah, it really is like having a whole toolbox, you know? You just pick the right tool for the job.
I like that. So we've talked a lot about what ETFs are and why they're so popular, but I'm curious about the how. How is technology, especially things like AI, changing the ETF game?
Oh, that's a great question. Technology is making a huge impact. For example, there's this rise in smart beta ETFs.
Smart beta, okay.
Yeah, so they use algorithms, often powered by AI, to go beyond just like tracking an index. They consider stuff like volatility or growth potential to pick and choose the securities in the ETF.
So it's like having a team of analysts constantly working on your portfolio.
Exactly. But there are definitely some downsides. You have to understand the complexities, for one.
Right.
Like the algorithms are using historical data. And past performance, doesn't always predict the future.
Makes sense. So it's not like a set it and forget it kind of thing.
Right. You still have to do your research.
So what else is on the horizon? Anything else we should be keeping an eye on?
Well, one thing that's really interesting is the idea of fractional shares for ETFs.
Okay, fractional shares. What's that?
So traditionally, you buy whole shares of an ETF, right?
Yeah.
Fractional shares would let you buy just a portion of a share. It would make it way easier to invest in ETFs with higher prices.
So you don't have to save up as much to get started.
Exactly. Especially for newer investors, this could be a game changer.
Awesome. So are there any other developments that would make ETFs even easier to use?
Absolutely.
Yeah.
We're seeing more and more personalization in the ETF world.
Personalization, okay.
Yeah, there are new platforms popping up that let you really tailor your portfolio based on your goals, your risk tolerance, even your values.
Whoa, so you can, like, create an ETF portfolio that matches your ethics.
Yes.
Yeah.
For example, some platforms let you focus on ESG, that's environmental, social, and governance factors.
That's cool. It's like you're not just investing in companies, you're investing in your values.
Exactly. And as technology keeps evolving, we can only expect more innovations.
Wow. It sounds like the future of ETFs is really bright. But let's bring it back to the present for a minute. If someone's thinking about adding ETFs to their portfolio, what are some of the things they should be thinking about?
Well, first off, it's really important to remember that ETFs are not a magic solution. They come with risks, just like any other investment.
Okay, so let's talk about those risks. What are some of the big ones?
Well, the most basic one is market risk.
Right?
The value of your ETF is going to go up and down with the market. But remember, diversification can help with that.
Okay, that makes sense. What else?
Then there's sector-specific risk. If you put all your money into one sector, like tech, and that sector crashes, your ETF is going to take a hit too.
Right, even if the rest of the market is doing okay.
And even though ETFs are generally pretty liquid, sometimes it can be hard to sell them quickly, especially if you need to do it at a good price. That's called liquidity risk.
So you need to make sure there are enough buyers and sellers out there.
Exactly. Finally, you have to think about tracking error.
Tracking error, what's that?
It's the difference between how the ETF actually performs and how the index it's tracking performs. Most ETFs try to keep this really small, but it's not always zero.
Got it. So even though it's supposed to be following the index, it might not be exactly the same.
Right. It's like trying to copy someone's recipe. Might end up with something a little different, even if you follow the directions perfectly.
Okay, so we've covered market risk, sector risk, liquidity risk, and tracking error. That's a lot to consider.
Yeah, it's really important to understand these risks before you invest.
Absolutely. But let's not forget about the benefits.
That's right. Even though there are risks, ETFs offer a lot of advantages.
Yeah, they're definitely an attractive option for a lot of people. So, to wrap things up, let's do a final check-in with you, the listener. We've covered a lot of ground, haven't we?
We have.
All those benefits, flexibility, liquidity, low fees, transparency. We even talked about some of those risks.
You got to go in with your eyes open, right?
Exactly. Now, all this information is only helpful if you use it, so I want you to think about it. What kind of ETF has really caught your attention?
Yeah, what are you most interested in?
Do you want something broad, like an S&P 500 tracker?
Yeah.
Or maybe you're thinking about a specific sector.
Right, maybe something like clean energy or AI.
What feels like it would fit your investing style.
And remember, this is where your own research comes in.
Yeah. Dig deeper into the areas you're most interested in.
Don't be afraid to explore. There are so many different types of ETFs out there.
And remember, there are a ton of resources out there to help you.
Yeah, websites, articles. You can even find other podcasts on this topic.
And hey, if you're ever feeling lost, don't be afraid to reach out to a financial advisor.
Yeah, a good advisor can really help you figure out the best path.
But even with an advisor, having all this knowledge is so valuable.
Absolutely.
Yeah.
It lets you have more productive conversations and really make sure you're on the same page.
Okay, so before we sign off, I want to leave you with one final thought. We've seen how popular ETFs have become.
They're only getting more popular.
Right. They really do offer a lot of benefits. So it makes you wonder, could ETFs eventually replace traditional mutual funds completely?
That's a really interesting question.
What do you think?
I don't know. It's tough to say. But it's definitely something to think about. The investment landscape is always evolving.
It really is. And, that's what the deep dive is all about.
Right.
Getting you thinking and encouraging you to explore more. So go out there and conquer the world of ETFs.
Happy investing, everyone.
See you next time.